Hello, this is Jordan. This video is being recorded on the evening of Tuesday, March 7th, 2023. Thank you so much for joining me today. And in this quick video update, I am going to look at just a weekly chart of GDXJ and silver. And because I wanted to look at the key support level. I mean, when we're looking at the precious metal sector, I mean, we have gold, we have silver, then we have the miners, and so we know that the miners and silver have been lagging really badly. Look, they've been in a secular bear market over the last decade or since 2011. There's been years within that period when there's been a cyclical or bull market. I mean, 2018 to 2020, in my opinion. Maybe you can include 2016, but for the most part, it's been a secular bear, and that is the case until gold breaks above 2100, of course. And look, so that's a big reason why the miners in silver have really lagged and underperformed. And until gold makes that move and we get into a secular bull, you're not going to see silver and the miners catch up. So with that being said, I'm looking at GDXJ and silver here. I mean, I like to look at GDXJ instead of silver because most people in the sector, we invest and speculate in juniors, and so therefore I prefer looking at GDXJ instead of GDX. But that long diatribe aside, looking at this chart, it's been a really rough start to the week. This is a weekly chart, so we have GDXJ at the top, we have silver at the bottom, and both these markets have really important support levels, and that's looking at where they bottomed late last year and then looking at their history. So looking at GDXJ, for example, if you look at those blue arrows, I remember looking at those levels like around 25, 26, as GDXJ was declining, where could the bottom be coming? And you can see there, again, right around 25, 26. I think the low was at 25.99 actually. So that's a significant level. And, if the market continues to come down, we're going to look for, having a long-term bullish bias. We're going to look for a double bottom here, a bullish double bottom. That's about 20% lower from where GDXJ is right now. So it does have some breathing room. Silver is getting closer. I mean, it closed at barely above 20. If we're looking at the real significant support for silver, it's around 1860. Of course, the bottom, I mean, it was kind of a, bit of a triple bottom there, a bit of an irregular head and shoulders. But the middle part of that came below 18. I looked at the monthly chart, and actually there was only one close below that 1860 level. But nevertheless, if you're just looking at 2014 through 2020, you can look at the blue arrows. You can see how that's been a significant level. So, again, having a long-term bullish bias, what we prefer to see here realistically is that silver, its downtrend or correction, whatever you want to call it, is really arrested right around 18 or even in the high 17s. So it's really clear to me, if we're looking out beyond just the next month or so, there's a lot of selling in precious metals right now, and it's clear the next strong support levels, again, for GDXJ and silver, and we're looking at these because in GDX the slope is similar basically. But if you're looking at GDXJ and silver, you can see, I mean, they tend to follow each other pretty closely. And so I like the symmetry there. Looking at both, we can see, again, the potential double bottom support. That's what we should be focusing on over the months ahead, assuming that this decline in precious metals continues. And, that assumption is based on some fundamental analysis and macro analysis, which of course is subject to change. And if we're thinking about the here and now, the higher for longer adage is the market is discounting that because economic growth in the last month or two has perked up a little bit. And at the same time, inflation statistics have not come down fast enough. So for these reasons, we're going to see increased tightening from the Fed, at least in the very short term here over the next couple months. I mean, maybe they can hike 50 at the next meeting. But, I wrote an article about the fork in the road. The Fed hasn't got to that point yet where they can't stop hiking. I mean, granted, myself and many others have been wrong about that. We probably thought it would have been at, 3% a year ago. But if we look at everything, maybe the Fed could get to 6% or 6.25. But regardless, when we get to probably when we're in the summer, it's really hard to see the Fed hiking in the summer, and definitely past the summer. So we're coming to that fork in the road, the end of this Fed hiking cycle. And look, if that's the case, and then that's accompanied by increasing economic weakness, that situation aligns with the potential double bottoms that I've drawn here in the charts. But, again, looking out over the next month or two, there's still room. I mean, that's what the market is discounting right now, higher for longer, and there's still some room for that trade to continue. And so if they hike 50 at the next meet, the market get ahead of itself and you see precious metals sell off more. So I'm just painting a picture of how we could see silver and GDXJ here continue lower in the next month or two. They come down to this potential double bottom. And then at that point, maybe the market starts to sniff out, hey, the economy's about to roll over, or it's going to get much weaker. The Fed's not going to be able to hike to 6.5% or 7%. And, that's when you can see this double bottom develop. All right, just a quick video for today, but I wanted to post this, considering I think the obvious potential here for a double bottom in these markets. And, maybe in another video I'll talk about gold's technicals. But it's important to look at silver and GDXJ because obviously gold's going to be the driver. But if these charts play out here, with this potential double bottom, like if you see a strong bottom in silver and GDXJ, I mean, that's going to be really good news for the sector, obviously. So, all right, enough talking from me. Thanks so much, everybody, for tuning in. Let me know what you think in the comments, and I'll talk to you again in the next video.